today. Stronger new home sales data propelling some of those stocks. Housing-related names are getting a boost. But what do the numbers actually mean for the overall sector? So is this a blip or the start of something sustainable? Our next guest is here with some insight there. So joining me now is Jim Egan, the co-head of U.S. Securitized Products Research over at Morgan Stanley. Jim, many of those securitized products deal with mortgages and financial instruments tied to mortgages. What does the data show you, and what does that mortgage information kind of tell you about what the broader state of the housing market looks like?
Absolutely, and thank you so much for having me. As you mentioned, we had a strong new home sales print this morning. If we take a step back, there are a number of different ways to kind of crack the housing market, a lot of different statistics that we look at. But one of the big drivers is affordability. And yes, there's been some volatility in mortgage rates. Mortgage rates have increased a lot over the past 3 weeks. But if we take just a wider view from the fourth quarter of last year to today, mortgage rates are down over 100 basis points. Affordability is improving. And as we see that affordability improve, you've seen mortgage applications increase. When we take a closer look, that application increase is a little bit more skewed, or it's definitely been driven by refinance applications. Purchase applications have kind of bounced along unchanged for the better part of 12 months, but that's not too unusual. We look at prior periods of affordability improvement, it sometimes takes 9 or 12 months for purchase applications really to pick up. And as you saw this morning, and if you contrast it to the data yesterday, we're seeing those pick up a little bit more significantly in new home sales than existing home sales.
Now, Jim, with all of that in mind, is there a way that investors out there can read some of this data and figure out whether or not the housing market is due for that sustained move higher, despite the fact that they've already been outperforming in certain key parts of this market rally?
Right. So when we think about those underlying kind of fundamental housing statistics, where home sales are going, where building volumes are going, as I said, purchase applications holistically kind of treading water for the past 12 months. But the second half of September, the first half of October, showing year-over-year growth in purchase applications really for the first time since 2021. It normally takes that 9 to 12 months to see sales volumes start to increase. Those purchase application increases kind of might be the first signs of that growth. And so from our perspective, we think in the fourth quarter of 2024, where we are right now, that's where we might be entering that sweet spot from a growth in sales volumes perspective. We don't think the growth will be as significant as it's been in prior periods of affordability improvement. Despite the fact that affordability has improved, it's still a lot more challenged than it's been at really any point in the past 30 to 40 years, with the exception of 2023. And the absolute supply of homes available for sale, it remains pretty tight, but we do think you're going to see growth. We think existing home sales are going to grow by about 5% over the next 12 months. And we think that new home sales, like you saw this morning, should continue to outpace existing home sales because the lock-in effect, one of the key buzzwords in the housing market, has kept existing listings pretty low. And you've seen more of a response from the supply in the new housing.
All right. James Egan with Morgan Stanley saying that homeowners across America can be cautiously optimistic. Jim, thank you very much. We'll see you soon.
Thank you very much for having me.